Good evening. Welcome to Master Your Money talk on personal finance. Today, we have with us Mr. Nikhil Gopalakrishnan. He, being one of the most noted figures among financial experts in Kerala and India, needs no introduction. He is currently the CEO of Pentad Securities and Brokerage House and is someone who is extremely passionate about spreading knowledge on personal finance and wealth creation. To flag off today's session, I invite Mr. Anu Jacob, National President of NIOA. Sir.
Thank you, Uni. Good evening to you all. Let me thank Mr. Nikhil for sparing his valuable time for us. And it is an interactive section for the exclusively for the new Indians, irrespective of the class or cadre or association. I think this is a new initiative that is being arranged by Kerala Unit for the benefit of the officers of New India. Let me wish all success for this session, and we are looking forward for future also sessions like this for the members of the New India. Thank you very much, and all the very best.
Thank you, sir. I invite Mr. C.N. Srinivasan, NIOA Kerala President, to address the gathering. Sir, please.
There is some problem in your mic.
Voice is not audible. Hello?
Yes, sir, yes.
Still the problem exists. We can't hear you.
Hello? Audible? Hello?
Parayyu Srini.
Audible?
It's now okay. Again, പോവാണ് Srini. ഇടയ്ക്കിടയ്ക്ക് പോവാണ്.
No issues, sir. We'll come back to Srinivasan, sir. We'll just clarify the network issue later. For now, without further ado, let me give our virtual platform to Mr. Nikhil and wishing everyone a wonderful learning experience.
Okay. Thank you everyone. Is it everyone in this group is outside? Everyone is part Malayalis, or is there anyone who do not understand Malayalam?
No, sir. We have shared the link all India basis also. We don't know whether they are joined or, but the link has been shared all India also.
Okay, then very good. I'll continue in English in case if any one person is sitting there without knowing Malayalam, it won't be fair to them. Okay, so thank you for initiating and sending this link to all India, and only Malayalis know me. I think that's what I understand, because when I started my channel, I started in both Malayalam and English, but later I understood that my Mallu English is not very acceptable by rest of India. So English channel didn't really work out. Then thankfully, my Kodungalur accent somehow accepted by Malayalis, and that's why I continued my journey as social media, spreading knowledge in terms of financial knowledge. That's what I continued, and I sincerely thank all the people who have supported me. I'm sure that some of you, I got to know from Krishnamar sir that he is a subscriber of my channel. So those who are subscribing and those who are listening to me, and in case if you are commenting me, so thank you so much. You all have played a big role in terms of making this initiative successful. And my background when I started my career, in an MNC in Bangalore. I was working in stock market. Then I was working in a global stock market, not just India. Then when I come out of MNC, I got an opportunity to work with my group of friends who has done MBA with me, and we all thought that it's good to. That was kind of our dream when we were sharing room during MBA time, that we want to start something and do something for a investor community, and that is what company called Pentad Securities started. About 10 years back we have started, and those days we were doing broking business only for the people who were known to us, people from my own family members and my friends' family members and our friend circle. That's where our clients were. We started from Mumbai, and we had offices across Kerala and Bangalore. That's where we started interacting with the customers and understood that just investing is not really making much of a sense for customers. It's very important that this is, after all, a personal finance. And in personal finance, person comes before finance. So it's very important to understand who is investing and what he or she really want. And that is where we started doing goal-based investing. And it is where we try to understand that what each of the person need in terms of their money requirement, and how we can ensure that they are able to get those money requirements based on the available resources they have, income they have, savings they have. Then the way we started working for Pentad has changed drastically. We try to understand the requirement of people, and based on that we started giving financial products to them. And that is where our demat account, and that is where our mutual fund, and that is where all other investments kind of plug in and started making use for customers. And as a social initiative, we used to go and conduct a lot of investor awareness program in many places in and around Mumbai, in and around Kerala and everywhere. And that is where I understood that it is very important for people to understand what is their money and everything. But when I go and present any of this session, I hardly get people. Even if any scheduled meeting also, hardly 2 or 3 people comes. And those days, we didn't have much of an interest for people to come and listen to us. Then I thought that it is good to do a video where we can record and keep it. People can come and watch anytime they want. And I don't have to repeat what we do, as a session. So we can talk new things. That is where this social media activity we started, Money Talks with Nikhil. And we try and educate people in a very basic things. Today also we are trying to talk very basic level, how each of us has to look in terms of their money discipline. That is what we try to do. Today I am trying to do. And I will speak for about 40-45 minutes, and post that you can post questions, and in between also if you have any questions you can comment it in a comment box, and then from there I will start answering that questions, and if any moderator is there, they can collect questions and keep it. In case if I miss any questions, you can ask me, and before finishing today's session I will try and answer whatever I know. In case if I don't know, I will research and get back that to you. You just can give your email address or number. I will try to answer that with my own expertise or someone's with someone's help. And I always enjoy coming and talking to group. And today, thankfully, all the organizers, thank you so much for inviting me. And thank you. It's not very easy to bring in about 100 people to any sessions, and as an organization you have done it, and congratulations, and thank you so much for taking that. Someone is presenting something, how is that, is it deliberate, or is it like by mistake they are presenting? Okay. I think it's a mistake. Okay, you just need to stop. Okay, very good. Okay, so that's good. So thank you so much for inviting me, and I hope I will add some value to this 1 hour. And my only hope I always tell whenever I go and listen is that you listen this and try to implement at least 1 or 2 points today what you are hearing. And if you try to implement and see that after 3 years or after 5 years, is there any use happens in your personal finance? Comment in my YouTube channel as that what really helped after hearing this session. And that will be if you do that, I will see that I'm adding some value to your 1 hour of time. So my humble request is that whoever is hearing, I may be telling some numbers that may be very example, but you need to put that number. When I say that your income, you put it your income. And when I say your budget, you put your budget. And whenever I say any SIP number, you put your number and see that how much you can make out of those kind of investment. So it's very personal. So you need to put it that number, based on what is your requirement. So then only this session going to be useful. Is it acceptable for everyone? Okay, because just listening, it's not going to make any sense. You just listen and just walk out of this, and there won't be any use. If you are trying and doing based on your number, then it will add some value. So I ask all of you to seriously, take a piece of a paper or a diary and take a pen and try to put in your number. That is where you are going to make a lot of sense after the session. Okay, with that. No further delay, I will just go and talk about my PPT. So I'm just sharing this PPT. I hope everyone can see my PPT. Yeah, can you see my PPT? Okay. I'm hoping that everyone can see that. In case not seeing, just Nikhil, just confirm.
Sir, no, I am unable to see.
Okay. What about others?
No one can see, sir.
Not in screen. Not in screen now.
Okay, I am trying. No, I'm not able to share also. That sharing is unable. I'm unable to do that. Yeah, 1 second. Okay, allow screen share. Okay, share this window. Okay. Okay.
Yes, now.
Okay, 1 second. Now I'm not able to go back to my PPT. Okay, yeah, I can see. Yeah, now I hope everyone can see. Yeah, okay. So I'm going to talk about 7 steps. So my only thing is that you can write down these 7 steps and try and see that are you really following that, or if you are not following it, try and bridge that gap. That will really make some difference in your life. So the first step is something which you all need to do is that may earn a good income. That is the first point which all of you have to do it. So my question to you, all of you, is that you can write down on your diary that are you really happy with your salary? How many of you are really happy with the salary which you are earning? So I'm not talking about how much you are getting, how much you are earning. But my question is that are you satisfied that kind of an income which you are getting it? So this is something yes or no. If no means what you need to ask is that what is that stopping you to get the desirable, or deserving income which you are supposed to get it, and how can you improve that gap which you are getting it? And it's a very important thing. When I come for any company and ask this, most of the people tell me that this salary you can't ask to people. Salary is a very private thing. But my question to you is that are you really happy with this kind of an income? Because it's about, are you satisfied with this income? Most of the people are not very satisfied with the income which you are getting it. If you are not satisfied with the income you are getting it, you can't really contribute to that organization and you can't lead a happy life. So the first thing is that can you kind of come to a happy state with that income, or if you are not happy that, how can you improve your income currently what you are getting it? This is a question which you should ask and you should answer yourself. So how can you improve your income? Only thing is that can you improve your productivity? Can you add your skill set? Can you improve your current role? Can you improve your result which you are bringing to your current role? Or can you do something which can complement with your current job and which can help you to get an income which you are really deserving and making you happy? Because most of the places where people are not satisfied, and that is the reason they are not able to put in the right effort to that organization. That way you can't. The one thing which you need to ask yourself is that how can you improve 10x of your performance, 10 times of your performance? That will ensure that you will get a good income. The problem is that if you are being lethargic, you are not really able to contribute what you are contributing, then how can you get a promotion? How can you get an income which you are really deserving? How can you get a pay rise which you are supposed to get it? So whatever way you can improve your productivity, that is a way you can ensure that you have an income flow coming in. Because it's not about investment, it's about the income which you are getting. It's about the ability you can save. Because if you are, I'm sure that all people who have started when your career, you may be getting, let's say, 10,000 rupees for salary. But after 10 years, after 20 years, you definitely will be getting at least 10 times of that. That means 1 lakh is your salary. After that also, if you are not able to make truce with that kind of a salary, or you are not able to get happiness with that salary, then who can save you? No one can save you. The only problem is that you need to get content with that income. Otherwise, it's a big problem. I'm not trying to be philosophical with that, but if you are not find a situation where you are not really going to make happy with your salary, it's a problem. I'm not asking you to be satisfied with a low income. No, I'm not saying that. I'm telling you to make a way that how can you improve your income, because in India we are not seeing that much, especially people who are sitting in a good job. This is not finding it, but there is a big problem in terms of losing the job. If any job cut is there is a possibility that if your productivity is not high, you will be the one who is going to get that job cut. You shouldn't be that. In case any job cut, you should be a highly productive person. That way, your organization shouldn't cut your position. That is the way you can ensure that your income continues. I don't have to talk any further, but you need to be really sure that how can you ensure that you get a better income. Then it comes to the second point is that spend less than you earn. Spend less than you earn is something which all of us know, but how many of us are really following it? That is a big question we have. And when you get an income, you should know that how much income you are getting it. Is there any other source of income you have? Are you getting any loan? Are you getting any rent, or are you getting any interest from your fixed income, or are you getting any income from your investment? These all are the point which you need to calculate and see that in a month how much income you are getting it. So once you know that how much income per month you are getting it, another point you need to really look at is that how much you are spending for a month. How many of us have a monthly income? So the first point which you need to write down in your diary is that have a good income. Am I really happy with that income? If not, what all the things I can do to improve the income which I deserving to do? Then write down all the source of income currently you have. Then calculate and see that how much you are getting total income. Once that is done, second is that how much is the monthly budget I have? How much is the spending I have? Am I really crossing that? If you do not have any control over your spending, you need to start doing noting down all your expenses on a daily basis. The best thing which I always seen, and I don't have any better method than this, is what you do is that if you are a person who are leading a life of paycheck to paycheck, what you can do is that you can write down in a piece of paper or in a diary each day, write down the date, then whatever the things you are buying, items, then you can mention that how much money you have spent for that item. If you go for a shopping, and for shopping, Lulu Mall, how much money you have spent. Then write down on the next column that Is it a need or is it a want? Want means you can cut down. Is it a need? You have to continue that. So, for example, you are going for a vegetable shopping. You are going for a fruit shopping. You are going for a normal home cooking grocery shopping. You can cut down. But if you are going for a restaurant on a regular basis, can you cut down that? If you have any habits like smoking or anything, can you cut down that? Those things are something which on a daily basis, when you start writing, you will be able to address it. Where is your money really going? So that is the way you can cut down your expenses and fix a budget and don't go beyond your budget which you have set it. So income managing tool, what you need to do is that at least 50%, within 50% you should be able to keep your monthly expenses, including your home expenses, everything. Then 30% you can use it for your wants. It could be your EMI, it could be your insurance and everything. 30%. Or if you want to do something which entertainment, vacation or anything, 30% maximum in a month. 20% you should invest for your child education, for your retirement and everything. So this is the way you should able to plan your monthly expenses. And the second mantra is a very simple: spend less than you earn. I hope everyone got it. And the third point, which all of us need to understand, is that how can you build a reserve fund? Reserve fund is a very important thing. You need to have a rainy fund. At least once you have the second point which you need to write down is that how much is a monthly expenses you have. That means that is the money you need to have to lead a lifestyle what you need to have. Even if your salary is not coming also, that expenses will be there with you. So rainy fund or a reserve fund, how you can build is that expense into 6. So for example, you are getting an income of 1 lakh rupees totally, and your monthly expense is 50,000 rupees, which means how much you should have a reserve fund? 50,000 into 50,000 multiplied by 6, which means how much is that? 3 lakh rupees you should have as a reserve fund. If you want to strengthen that, you can keep it for 12 months also. But at least 6 months you should have. Even if 6 months is too much for you, first of all, try to build 1 month. Then make it to 3 months, then 6 months. So once you have that 6 months monthly expenses, monthly budget you have, then you will feel a confidence. In case if any emergency is there, you will be able to lead a life which you deserve to have. For example, you want to take a sabbatical, you want to take a break. Everything is possible. If you in a medical emergency, you don't have to go and take a loan. You can use this fund. Then how you can keep this? Either you can keep it in a liquid fund or a debt fund, in mutual fund, or separate bank account. And when you have a separate bank account, you shouldn't even have an ATM card. You should keep ATM card, everything away from you, because this is the money you take only if very emergency. For example, any family member asking that let's go for a vacation. You don't have money, don't take it from this reserve fund. Or your family is thinking that let's go for a restaurant trip, go for a night dine out. If you don't have money, don't take it from here. Any of your close friend is asking for a debt, don't take it from here. If you have any money, otherwise, don't give that money also. So use only for emergency fund. I hope everyone understands that. So that in Kerala, loan and debt is a bigger problem. So when you take any loan, you should know that which is a good loan, which is a bad loan. What is a good loan? If you are taking for a home loan and you need a home in a very urgently, then that's a good loan. If you are using education loan, that is a good loan. For example, home loan and education also can be a bad loan. For example, you have a one home and you are staying in Ernakulam. You want to buy a home in Wayanad and keep it just like that. You don't need any use. You can't even give it for rental. That means that is a bad loan. If you have money, then only buy that. Otherwise, don't buy it. Or you are taking education loan and you are taking education loan for your children, and you are very clear that your child is not at all interested in that education. You are doing that for the sake of all your neighbors and your relatives are going for that education. If you are taking loan for that kind of education, is it a good loan or a bad loan? You decide yourself. Then you categorize, is it a good or bad? Okay, so that is the way you need to calculate. Bad loan, of course, any loan which is taking for a depreciating asset is called bad loan. You are buying a mobile and you want to buy an iPhone which is beyond your budget, and you are taking a 0% EMI loan. Some people think that...
Sir, I'm sorry to stop you, but your PPT is not visible, sir. I just got out of the meeting. I was texting you. I couldn't rejoin. So your PPT is not still visible.
Okay, it's for everyone or is it for only for you?
Yeah, it is for
Yes, sir. Yes.
Okay, how is it now?
no, not still not visible.
It's still showing your Google Meet page, sir.
1 second. Okay. Is it okay now?
Yeah.
Yes, sir. Yes.
Okay, okay. Sorry.
No, now it has gone again. I think when you are trying, now it has come back. I think when you are maximizing, it is working.
Okay, okay, good.
Now it is working.
Okay, okay. Sorry, that's my bad. Okay. Okay, yeah. So I'll continue from here. Is it okay? Yeah. Yeah. So when you talk about bad loans and good loans, it's a very simple that you should understand that are you really adding value, or is it a wealth creation, or is it a depreciating asset? Depreciating asset, anything which you're buying it is a bad loan. Or if you're buying a car and car is something is very needed for your personal life, it can be a good loan. But your affordability to buy a car may be a small car, but you are buying something which is beyond your budget, and your EMI is coming more than 30% of your monthly income, then it could be bad loan. For example, if you have loans, multiple loans, home loan, then you have car loan, then you have a personal loan, all this loan put together, monthly it's overshooting more than 30%, then that's a bad loan. So that is the way you can, so unknowing loan. So in Kerala, we have especially South India, we have a tendency to get into chits, and then chit and kuri. Kuri has two names. One is chitty, people think that it's an investment. Then people bid that and auction that. Once you auction any chit, or once you get a lucky draw and you get that full money, then that kuri name will change it to loan. Okay. So then once you take out the money, that is a loan. That is no more an investment. So don't burden with that kind of a chits. If you are really need for money, if you are a businessman, then it's good. Otherwise, you need to really know that you really need that. Then think and take that. Then gold loans. Sometimes people take a gold loan, and then what they do is that every year they pay the interest and renew that, and they won't get out of a gold loan. That is also very bad. So think and take it. And credit card, don't ever convert any of your expenses of credit card into EMI. That again is a very bad loan. And 0% loan also, it's not good, because once you have a 0% loan, your income is reducing monthly. So that is also, you need to see. All these things are a general thing. You need to understand that what purpose you are doing it. Based on that, you need to understand that are you really getting into that trap or not. So based on that, you take the decision. And fourth point which we need to have is that you need to have a proper insurance. So being work insurance, all of you know the importance of insurance. Everyone should have at least one medical insurance outside your company. When you're working in a corporate, you may be getting the insurance, but once you are out of it, there is a chance that you won't get it. So having a separate individual policy at the earliest, it's the best to have. Then term insurance is very important thing. Term insurance means like it's not investment. It's about clearly if any death happens, your family should get a big money. For example, you have a monthly expense of 50,000 rupees, and your child or your family can't get financial freedom next 20 years, or they are very young, they don't have, your children are very young. In case 20 years, they need to lead a life without having any income. In that case, 50,000 into 1 year is equal to 6 lakh. 6 lakh into 20 is equal to 1.2 crore rupees. At least you should have a cover. If you have a loan, multiply, add that also. So 50 lakh loan also there. 1.8 crore is the insurance cover you should have minimum. So that is the way you should have term insurance. Critical illness, very clearly that if any critical illness happens, you should have that kind of a cover. That way, if any critical illness comes to your life, you will be able to get covered with that. So these are the way insurance you can, you have to get covered. Then once you have good income, once you have a proper budget, once you have a proper emergency, once you have a insurance, then you should start thinking about investing. So investing, you can invest for your responsibility, invest for your dreams. So what is responsibility? If you have a child education, child marriage, if you think that is your responsibility, you have to invest for it. If you want to buy a home and you don't want to or you want to buy a home with a loan or anything, that is your responsibility. Retirement is your responsibility. So for these purposes, when you invest, it's very important to understand is that you shouldn't invest aimlessly. You should invest for a goal. That goal should be very smart. Goal should be very specific, and based on that you should invest. You should consider inflation, you should consider current value. So for example, your child is child education. Child education, let's say, what is your child education, child age? So child is 5 years old, and you want to send your child for engineering at the age of 17, which means you have a 5 minus 17, 12 years is there. So just consider that if you want to send your child for engineering, at least today's values of 15 lakh rupees. In 12 years, this 15 lakh rupees will become at least 30 lakh rupees. That is a inflation figure, right? So which means in next 12 year, you need 30 lakh in your account to fund your child education. So for that, how much money do you have a real money? 30 lakh rupees now itself. Can you keep that money in FD? Or can you keep at least monthly some money in order to reach this particular goal? That is the way you need to invest. Similarly, for child education, your own retirement, or same with your investing for dream. So it could be you want to buy a vacation, or you want to buy a second home, you want to set up a business. All these things you need to figure out your current expenses, and you want to know that by when you want to do it. Based on that, you should understand your inflation, and you should calculate and start investing now. Then all your dreams will be fulfilled. So all your wishes, all your dreams, you need to convert that into goal, smart goal. So when I say smart goal, it's very simple. You need to make it a specific goal. You need to be measurable. You need to understand that is it going to attainable with your current income, or is it really relevant for your life as a purposeful life, or do you have at the same time do you have a timeline for this particular goal? That is the way you should invest. So let's take an example of buying a house. So how many of you have in this group have a desire to buy a house? So can you convert your dream of buying house into this format? So what is specific means? Buying a home in Kochi or wherever your location, it could be specific thing. Or if you are to mention the specific line or specific village, that is date. Or measurable means how much is the present value of that particular house. Is it a 50 lakh rupees? You need to mention that 50 lakh rupees. Is it attainable really? With the current CTC, is it going to be attainable? Or with the current, the kind of, with a loan, is it achievable? So you can mention that, is it attainable? Just imagine that your income is, let's say, 1 lakh rupees, and you have a dream of buying a home worth of 5 crore rupees. And with the current salary, it may not be possible. I can, I'm not being negative, but you need to improve your income. Otherwise, it's not attainable. And relevant, it's a family requirement. So, for example, you are leading a happy family life, and at the same time, you don't have any plan to move out of India, and you don't even have a house in India. You want to go and buy a house in Dubai. Is it really relevant for you? So you need to understand it's relevant. Then you need to buy. Then it's a time bound. By when you want to achieve this particular goal. So this is the way you need to convert all your goals. It's the same thing for your retirement. So how can you understand? How can you meet this? So 50 lakh is your current cost, and inflated value could be 75 lakh rupees. And by when you want to achieve it? 31st March 2027. And do you have any current? Do you have any money in your hand? 20 lakh you have, let's say. Or what is the gap? 20 minus 75. It's a 55 lakh you need to acquire within 2027 March 31st. So which means you have two options. Two options in front of you. This 20 lakh you can invest till 2007, and you will get some income out of it, or accumulation out of it. At the same time, monthly you can decide how much you can invest SIP. Then you will able to achieve the 75 lakh without any problem, without taking any loan or anything. That way you can build a house. This is the way you can build it. And how can you calculate your retirement? This is a retirement. If I can show you how to calculate retirement. Just with the screen share I have. So, for example, you want to, this is your retirement. So, I just want to show you this calculator. This calculator, if you want to, do the calculation for yourself, you can download app called Box by Pentad. Box by Pentad, and there you have a retirement calculator. There is you can go to financial calculators there. Under that, you have this retirement planning calculator. And let's say you have a 30 years of age and you want to take a retirement of 60 each year. So that means, and you have a life expectancy of 85. I'm putting the till 90th year you are alive. That means how much money you need. So what is your current monthly expenses? Let's say 50,000 is your monthly expenses. 50,000 is your monthly expenses. And inflation, you are thinking that 7% inflation can happen. And before your retirement, you can invest in a risky asset. So you are expecting that 12% growth, you are able to get it. And after retirement, what is the kind of growth you are expecting? Because after retirement, you can't take a risk like investing in equity mutual fund, complete money. So you can put in, let's say, 9% after retirement, you are expecting the return. In that case, how much money you need to invest now in order to achieve your goal? So 50,000 rupees at the age of 30 means by the time of 60, you need at least 4 lakh rupees per month. This is an inflation saying, which means if you want to get this kind of a figure, at least 11 crore rupees you need. In order to get 11 crore rupees within 60th year, monthly you need to invest at least 33,000 rupees, that money you need to invest. Or now if you are investing lump sum money, you need to invest 33 lakh rupees. This is the way you can achieve this 11 crore rupees of a retirement, calculation. Or just imagine, I'm just putting that if your age is 40 and you want to take a retirement at the age of 60, that means 50,000 means you need only 2 lakh rupees. In order to achieve this figure, you need to get at least 5 crore rupees. And in order to achieve this 5 crore rupees monthly, you need to invest at least 60,000 rupees. This is the way retirement calculation done. And this is, I'm just showing, for you to understand how this works. And you can do the calculation for yourself, entering into this Box by Pentad app and take the retirement calculator. I hope it's a very fast, I have explained to you, but that is the way you can do it. And what are the different products you can invest? You can invest in mutual fund, you can invest in share to achieve this particular retirement. So monthly I said, no, this much money is needed, or lump sum you can invest. So this money you can invest in either mutual fund or stock or NPS also. I'm sure that I got to know and I got to understand from your organization that NPS is something which you all invest. So NPS is a good option for you to achieve retirement. So what is the good thing about NPS? NPS, you need to invest till 60th year, and you have an option to take 40% of your corpus at the age of 60 with the tax free. So you don't have to pay tax for that particular component. And you can extend that to 60%. That maybe the 20% which you are taking extra component, you need to pay tax. Then 40%, minimum 40%, you can convert it for annuity. Annuity means you can take monthly income from that particular investment. That also you have various options. You can increase every year by 3%. And there are a lot of options they have given. And when you are investing in the mutual fund only. There are investment providers, people like SBI, HDFC, all these providers are there. There you can invest. And when you invest also, you can opt that aggressive investor, conservative investor. If your age is, let's say you have 10 more years to invest, you can go for as a aggressive investor and you can invest. Or you are maybe in next 3 more years is there only for your retirement, you can go for a conservative investor mode. That is the way you can utilize NPS as an investment. And good thing is that investing in NPS is nothing but investing in stock market. So that is a possibility that you can get an inflation beating in return. So it's one of the very good product which is our pension fund is providing. So utilize this particular investment option. Then the last one is that creating a wealth is very important. So once you have this kind of an investment, you need to write a will and keep it, and you need to document all your assets very clearly. Because if in your absence, how your family members acquire that wealth? Do they know that where you have kept it? And who is the contact person to get that investment? It's a very important. You need to keep that kind of a document yourself. If you don't have any document, you can go to our website Talks with Money and download the data sheet, and you can note down all your investment there. You have a column to note down all your mutual fund investment, all your insurance, all these things. I have seen people who have taken medical insurance and term insurance. Only that breadwinner is aware that where he has kept and everything. Other family members do not have any clue where that document and everything. So it's very difficult to manage it, and especially people who have a real estate and everything. If you are not writing a will, it's very difficult for the family members to take that asset into their name. So very importantly, if you have some asset, write a will and keep it ready, and make sure that you keep it transparent. And there are cases you may want to keep after your life. You want to hand over all your property to your spouse. But if you are not writing a will, this will go equally to your spouse and your children. So if you have 3 children and or 2 children and spouse, it will go to 3 names, and you may think that what is the problem? Just imagine your spouse want to stay here and your children want to sell off and go and settle down in Europe or anywhere. So where your spouse is going to stay? So these are the things you need to decide how you want, and based on that you have to document it. It's a very important thing. Especially you think that my family members will not fight or anything. It can happen. So don't give a chance to that. That's all. And these are the 7 steps which we have to follow. So what are the 7 steps? If anyone can type it in the chat room, that will be good. First thing is that you should have a good income. You should spend less than you earn, and you should have an emergency fund. You should have a proper insurance. You should invest for your responsibility. You should invest for your dreams. Then you should keep all document properly, and you should create a good wealth and transfer to your next generation in a proper documented way. So that is the way you have to arrange your entire finance. I will just touch upon how you can improve your monthly investment. All of you will have income in this group, definitely. And what you need to do is that you need to make sure that you have a proper budget and lead a life with a proper life which you deserving. At the same time, you should keep at least 20% of your income for your future. It could be your retirement, it could be your child education, anything. So that monthly expenses which you are getting 20%, you should invest in a SIP or a RD or whatever is comforting you. So investing in SIP, it's a mode of investing through mutual fund. So what is mutual fund? Mutual fund is an investor is collecting pool of money and investing in a fund, and there is a fund manager who is a qualified person investing our money into proper securities. This securities could be bond, equivalent to FD, equity, share market, then silver, gold, then even foreign market also. So based on the objective of that particular fund, this fund will be invested, and whatever return comes to that fund, it will be transferred to the investor. And whatever fees they have to collect, maximum equity 2% is collected, and that will be retained in the fund house, and remaining will be coming to us. And only expenses what we have other than this expense is that if any tax incur, that tax has to be paid. So on a long term, 1 year, if you are investing, after 1 year, up to 1 lakh rupees of profit, it's a tax free in a year, and anything more than 1 lakh, you have to pay tax 10% of the profit. That's all. And within 1 year, if you are withdrawing, 15% you have to pay for equity. All other funds, it's added to your income. On that, whatever tax slab, you have to pay based on that. Okay. Then it's a why mutual fund? It's a transparent. It's a legal. There is a regulator looking for it. You don't have to worry about the safety, transparency, and it's a liquidity. It's a pretty high, and you can diversify. You don't have to manage anything. You have a fund manager looking after. And the beauty of this is that a qualified fund manager is taking care of your investment, just like any HNIs. If you are investing crores of rupees, or if you are investing 500 rupees also, same quality, you are able to get it for your investment. What more do you want? That is called mutual fund. Okay. Then investing in mutual fund, you can invest either if you have a bulk money, you can go and invest. If you have a monthly some money, or if you have a daily some money, if you have a weekly some money, you can invest. So that is called SIP. So automatically money will be transferred from your bank to invest in that mutual fund, and fixed time, fixed money, it will be collected from your bank, and you have an option to stop anytime. You can increase or decrease anytime. And the beauty of this investment is power of compounding. I will show you with an example in the next slides. Then, if you look at this particular slide, you can able to see that if you are investing 10,000 rupees, I'll just show you this one, it's a bigger screen. If you are investing 25,000 per month, 25,000, whatever is possible. If you want to invest 5,000, it's fine. So 5 years, if you invest 15 lakh rupees, you invested. And if you are getting 12% of interest based on stock market risk, that is you need to understand, then you are able to generate, let's say, 12% growth. This 15 lakh rupees can go up to 20 lakh rupees. That is only 5 lakh rupees. That is within 5 year time. That is not the beauty. It is in the beauty lies in the long term investing. Let's say if you are able to invest 20 year, 30 year, 25 year, you look at this difference. So 5 years it took to get a 5 lakh rupees profit. But from 15 years to 5 years, within that particular 5 year time, from 80 lakh, it's gone to 1.8 crore rupees. That means 1 crore rupees happened in this 5 year itself. If you look at here, within this time, 1.8 crore become 4 crore, 3.9 crore. Because this period, this money also improved by 12% on a compounding manner. That is a beauty. So younger the better. In case if you think that you late, start today. That is today you can start it. Monday only you can start it. Today market holiday. But that is the way we need to invest. Or if your young children they're just starting the career, make them invest at least 10% of their salary. So that means if they're starting at the age of 23, if they're continue investing till their 60s, they will able to enjoy this 30 year of investing. And if you are investing today, and if you are investing with 5,000 rupees, that's enough. But every year, increase your amount by 10%. If you are getting 15% salary hike, 10% or 15% increase in your SIP also. You won't even realize that how you are able to accumulate your money. That is the power of compounding which you can gain out of it. Then yeah, that's what I wanted to cover today. What we have covered so far is that 7 steps which we can bring into our investment journey to enjoy a peaceful financial life, and we touch upon what are the options we have for retirement and mutual fund investment, how it can help us create a wealth. We can start investing on a monthly basis. We can start investing on a any time which you can invest. And only thing which you need to understand is that how much money you can spare from your monthly income. For that, 2 options are there. Either you can reduce your expenses or you can increase your income. And that surplus amount, whatever savings you have, put it in this SIP format. Let it monthly, whatever salary you are getting on that particular day, next day itself SIP money has to go, and you should think about it. And that money, let it keep it for your retirement time. You won't even realize that how that will help you to make your retirement life comfortable. That's all I have today to tell you. In case if you have any questions, you can call up this number, or these are our social media pages, or this is a email address of this my name, but my team members are answering this email with all your questions. They will able to assist you whatever little questions you have. In case if you want to take our financial planning consulting or anything, you can come download this link or come to our website Talks with Money. There you will able to book an appointment with my team. There you can give your salary details, your all your aspirations or whatever financial goals. Based on that, they will tell you how to invest, where to invest, all these things, and you can start investing with us also. In case if you want to invest with us in mutual fund, Box by Pentad app you can download and do the KYC and invest. Or if you want to do a share trading, you can open account in Demat account in Pen by Pentad and start investing. These are the investment services we can give. I'm just showing you this is and you can type in money talks with Nikhil. You will able to get into our pages and this is the contact details you can take in. You can contact. Yeah, I'm happy to take any questions at this point of time.
The session is open for people to, if you have any doubts, you can ask now.
So SIP or lump sum is better. It's both are good. Only thing is that what is comfortable for you. If you are a salary person and you are getting a monthly income and you want to take some portion of it and invest, SIP is good. Or you have any bonus comes in and you have a lump sum money, lump sum investment is good. And if you are not comfortable about the market timing, market is high value or anything, you can do a systematic transfer plan and invest. That's all.
Srijit, if you could let people unmute their mics, that would be nice, so that people could talk.
How to invest in gold? So you can invest in gold in multiple ways. First one is that you can invest in buy the jewelry and keep it jewelry. The disadvantage is that you have the storage expenses and making charges and all those things. So coin is another option. Next option is that ETF you can buy. You need to have a Demat account and open, invest too. Or mutual fund you can invest. Other option, best option, what we have is that gold sovereign bond. Gold sovereign bond is another option you can invest. So where you will able to get a 2.5% on a yearly basis on your investment, and 8 years you need to invest in that bond. Then after 8th year, whatever appreciation comes, you can take it without any tax. What is this one? Yeah.
What is as a youngster, representing all the youngsters here, let me ask, what is the right time, or is there a right time to buy a house? Because as salaried individuals, we are all, forced into that loop where we have to, as we get married, buy a house, have children, and all that. So, is there a right time to do that?
So the point is very simple. If you are married and you have a good dowry, you can buy it now, or you can make yourself comfortable to get at least 50% of your down payment. Then you go and buy it, and don't get stressed and buy it. Staying in rental is not a problem. Some people think that the rental is gone, but you will get a lot of comfort. And there are people I have seen that they don't even have money to do the down payment of 20%. So what they do is that they call for a chitty or take any gold loan. Then they acquire some money for down payment. Then they take the home loan. That is not that wise option. At least 30 to 40%, 50% if you can keep a down payment, then go and buy the house. And at least in terms of EMI, if you have a monthly salary, that EMI shouldn't cross more than 25% of your income. That stage is a good option to buy loan base this one. Even if you are not, if you are in a position to buy with your own money, that is also a good option. Yeah. Okay, I'll go to the chat. This one. Okay, so how to buy? What is index fund? Index fund is, we have index, right? So in paper you will see right now Nifty gone up and the stock market is gone up and all those things. So that is based on Nifty or Sensex. So index is nothing but Nifty or Sensex. So and there are multiple indexes: small cap index, mid cap index, banking index. There are other volatile. Let's talk about only Nifty. So in Nifty there are 50 companies. And any fund manager is going to mimic whatever that index. So that investment is called index fund, and that way you will able to get the average performance of the stock market. That's called index fund. And how to analyze script? when trading in stock market and buy EPS or that. See, there are many methods, and I don't think that I can cover in this method to invest. So if I tell something, I think I may be giving the wrong answer. So that's the reason I'm not saying it. Only thing is that try to understand that if that companies are making profit for last 15 years or 10 years, or if that companies are reducing the operational expenses, if the promoter is good, then go and invest. There are many things. I'm just giving an example. Okay, sir. How much fund should you have in our portfolio? See, you can keep entire fund also. You can in the portfolio. How much should you ideally allocate to large cap and mid cap? So the whole it's about that. What is your goal? So, for example, you have a goal of making a retirement fund, and retirement fund is 5 crore rupees. So you need to split that into all these funds, and you need to mix gold and silver. You need to have a debt also. You need to have an international fund allocation also. So based on your goal, you need to allocate it. So that's a way. So if large, mid, small, I think your entire portfolio 70% you can go up to these 3 funds. Is there any platform for buying sovereign gold? Okay, so sovereign gold now, see, if you have a demat account, you can buy through demat account from the secondary market. Otherwise, next new tranche is not announced yet. You can either buy from any broker or any bank. You can buy sovereign gold bond. Can you elaborate large cap, small cap equity, which according to you risky? See, in India, large cap means in India, in entire world, companies are classified in terms of market cap. Market cap means what is the whole value of that particular stock, particular company. So in India, first top 100 companies are called large cap. 101 to 250 companies are called mid cap. 251 and below are called small cap. So bigger company is large cap. So consistency you can expect from the large cap company within equity. Small cap is a highly risky, but there is a possibility to get higher return. So that's the way you need to play around. Yeah. Then in a month, which date is better for? There is no study proven that any difference is there. I have seen a study which is whole 31 days they have invested and seen. In 10-year period, all dates are giving almost same return. Each days are giving a return between 14.5 to 15%. Only that 0.5 difference is there. So date is not an important thing. Only thing is that when you are getting the salary, next day is the best day to invest. Because if you are keeping for the last date, if you spend it off, you won't have the money to pay for SIP. That's all. And where to start mutual fund investing, bank or financial institution? Or see, you can start in mutual fund. My company Pentad Security, you can invest. You have to download an app called Box by Pentad, and there is a contact details also there. You can contact my team. They will help you to start investing in mutual fund. You can note down Box by Pentad, that is our app. Can you elaborate overnight fund? See, overnight fund is something which is invest in something same as like a savings fund, a savings bank. In savings bank, when you invest, you hardly get a 2-3% of rate, right? Similarly, if you are investing in mutual fund, overnight fund, you will get a similar kind of a return. It will be little better than that. So that is a overnight fund for you. And these funds, basically, these are like a treasury papers where the maturity date is 1 day. So there is a very less chance these kind of bonds will get default and you lose the money. The return will be very less, but these are a very safe fund to invest. How can I invest wise for my retirement benefit for a person retiring in New? See, sir, you need to plan your investment, and you take up a financial plan. Then understand that are you getting a pension? This money you want immediately? Do you have emergency fund? Based on that, you need to make a plan and see that what portion you need to invest in FD, what portion you need to invest in that mutual fund, and how much portion you can allocate for equity. That is the way you can plan. And I made it complicated for you. If you want, you write to my team. They will do a financial plan for you, and they will advise you that what allocation you have to give for each asset. There are news about over-inflated stock market. What are the chance of correction happening in share market value? I don't know, sir. There will be a correction in every 5 years or 3 years. So that hasn't happened for last 8 years. So in 8 years, we have seen during COVID period, we have seen. So that in 5 years, you will see 2 times you will get a deep correction. So only thing is that bring in money to stock market with an intention for 5 year plus. So, a correction can happen anytime, that's all. And you can't really tell that this is an inflated price. We have seen that from this kind of pricing level, it has further gone up. There is a possibility that from here also correction happen. So that is not a worry. Only thing is that you should be very clear. If I am investing now today, I will take only this money after 5 years, that's all. Suggest percentage of verification for FD, mutual fund and other. See, sir, open FD, how much? See, we can't really tell that what percentage. See, mine and your requirement will be entirely different. My age and your age will be different. My risk profile and your risk profile will be different. So it's purely we can understand only with the discussion with the your goals to invest. I can tell you ideal percentage. On theory, we tell many things. Let's say you keep some money for emergency fund, long term fund, 100 minus your age. So let's say if your age is 40, 100 minus 40 is 60%. 60% you can keep it for equity. Rest you can keep it for FD. That is not. It's a very theory, but if you get into your plan, you need to look in little more detail. Okay, heard about investments in RBI. Can you brief, sir? Is it? RBI, you have papers where you can definitely RBI is better than FD. So RBI is a safe and a pretty decent return compared to SEBI, SBA and all. So that is a good investment. You can go to their website and invest, or any stockbroker you can consult. You can invest. Will higher AUM affect the performance of fund? Depends, sir. Depends. Higher AUM depends. It depends. So, for example, debt funds and all, higher AUM is better. And small cap kind of thing, higher AUM, it can affect. Now higher AUM, small caps are performing better. A couple of funds are performing better because when performance comes, people come and invest in that kind of fund. The difficulty is that if any market correction happens, they can't exit. So our investment can go a little more deeper. So you need to understand, based on those parameters and invest. Suggest alternative investment to FD similar with debt mutual fund is one option. Then peer-to-peer lending is there. That is also another option compared to FD. FD also different risk are there. Nationalized bank have a different risk. NBFC has a different risk. So risk also you need to understand. Yeah. Okay. I think I have cleared all your questions. Any other questions you have?
Sir, we have a lot of calculators online where we can plan these things like planning for a foreign trip or buying a car and all that. So when analyzing all that, so if I want to go for a foreign trip in let's say 2 years and buy a car in let's say 3 years, these calculators give me a figure of monthly savings which is almost let's say 70% of my salary. So does it mean that like we are largely underpaid or something, or is there something wrong with all this calculation?
It's not about wrong or anything. It's about you need to increase your income or reduce your your expenses. See, in calculators, what we need to understand is that we need to go with a sensible thing, right? For example, you at least inflation, you need to look for 6% or 7%, and expected return, what you can keep it for is a 10% or 12%. So that is a calculation you need to look at. That is only a roadmap. See, initially when you do all this calculation, you think that it's a bigger figure, but the beauty is that if you can create very good corpus. For example, if you can create a corpus of 1 crore rupees, if you have 1 crore rupees, you need only 10% growth. Even if you are getting 10% growth, every year you are making 10 lakh rupees. So from there you will able to really generate your income. Only thing is that you need to give a patience to create a corpus of 1 crore rupees or a 50 lakh rupees. So the thing is that you need to give some time for your investment to grow. Most of the people, what they do is that they want to go for a vacation when you are having a zero income. So 5 lakh rupees may be bigger money. But if you have a 50 lakh rupees or a 1 crore rupees, with the 10% growth itself, you are getting 10 lakh rupees. Then planning for a 5 lakh rupees vacation is a very simple thing. So you need to give some time to accumulate some money, that's all. I don't know, I said it in a very harsh way, but this is a reality.
No, sir, no.
Okay. See, any other questions? Yeah. Yeah, I think not many questions, and I think only request I have today is that whatever we discussed so far, I'm sure that most of the things which is something which you might know, but the question is that have you done that? Have you done that calculation yourself? And at least try and see that what all your dreams and wishes you have in terms of your life, and you translate that into money terms. And see that how much is a budget for you to achieve that, and try to calculate that monthly how much money you really need to achieve that kind of dreams you have, and try to see that how much money you need to keep aside on a monthly basis. Maybe in order to achieve all your dreams in your life, you may need 1 lakh or 1.5 lakh monthly SIP. But now you may think it's a big money. But just see that how much money you can spare on a monthly basis. Even if it's 10,000 rupees, start doing that SIP on a monthly basis. Once you try to see that growing, once you're seeing that growth, you will get the motivation to increase your salary. You will have the motivation to reduce your expenses. Then slowly you will increase your SIP, and one day you will reach it. I'm talking from an experience of working with maybe a good number of clients, and I have seen clients who really didn't have the courage to spare 5,000 rupees on a monthly basis. Those people are saving 50,000 and 1 lakh rupees on a monthly basis, and they have accumulated over 1 crore rupees. And I can see that kind of a happiness and satisfaction in their face. But when I saw them initially, they never had that confidence that they could keep that kind of money aside. Only thing is that start is important thing. Okay. And one more question: what is the ideal investment period for a mutual fund? If the correction happens every 5 years, does it mean that it varies from large cap to mid cap to small cap. Large cap normally catch up the it will come back very fast. Other smaller cap, it will take its own time to come back. But the whole point is that in 2008 it took about 2 years time to get the return to previous thing. But in 2000 during COVID period, within 6 months it come back. So within 3 months it's come back. So it depends on the period. Yeah. Okay. What about buying SGB from secondary market is good. You can buy.
Sir, investing in equities right now when the market is trending at an all-time high regularly, investing in mutual funds and SIPs, is it a good time to enter the market right now or start an SIP right now?
It is, definitely. So see, my point is that if you are expecting a return in 1 year, it's not a good time. But if you are giving it a time of, let's say, 5-7 years, it is a good time. So I got a 2 question. Is it good to invest in IPO? Investing in IPO, it's not really a option for me. It's purely depends on what you call the you really convinced about that particular company, then only invest. Don't think that IPO is a cheaper and invest. Right? Really understand that you really love that company. You really think that investment can make sense. Always try to wait for the secondary market to start and see that how the stock is performing. Once you gain that confidence, then only invest. IPO is not IPO. You may not be transparent to judge the fundamentals of the company. I hardly invest in IPO. I think I haven't invested any company in IPO. Yeah. Then when to exit, it purely depends on your goal. For example, you are investing for your child education, then your child 1 year before your child's college, that is the time you can exit. So if you're asking stock, you need to have a reason for investing in a stock. So keep checking that whether that reason is correct or not. If that reason is not the same, then you exit.
Do we have any more questions?
Okay. I don't comment on specific stocks. Yeah. I think you will know. Sir, is it advisable to keep invest in equity 50% till 40 for NPS instead of 35 in auto? See, I think in my opinion, I have a more appetite for risk. I will say that till 55 you can invest in equity.
Sir, is there an option to withdraw from NPS before you reach 60?
I think there is an option, but if you are investing also, I think some 20% or something for some specific reason you can withdraw. I haven't seen an experience of withdrawing, but there is option. I have seen this one. But as a investment professional, I am against withdrawing
Because NPS is very conservative as far as even if you increase your share in equities, NPS seems to be a very conservative option to invest. So is it? I'm not asking if it's advisable. Is it a good choice to withdraw from NPS and invest that money in some more aggressive investments?
See, the problem is that you have seen only last 3 years market. We have seen market which is giving minus 20%, 30% and all. So now there is a lot of inflow into small cap and mid cap, and we think that stock market is a place where you earn risk-free 20% return. That is not the case all the time. So don't get enthusiastic with that kind of this thing. Balance it. Okay, so for your nominee it will go. Even for spouse also, they can opt annuity. So that is a clear guideline. So that is a spouse, your spouse or whoever is nominee, they will get it. it will go for annuity. This one I need to check again. So you have an option to take both, I think. Because I believe that it's a annuity. It will go because that only that first 40% or 50% you can take as a lump sum. Others it go, and that need to be checked because I have read somewhere that we can collect everything. So, sir, is it mid cap is better to get more return considering the correction also that small cap? See, there is a study I have done for large cap, mid cap, and small cap. So mid cap has shown more return in that. There are multiple studies we have seen. So on a consistent base in a 10-year study, mid cap has shown, I think 0.5% or 1% better than small cap and large cap.
Yes, if there are no further questions, we will wind up the session. Okay, can we?
One more question. Sir, can you operate two demat accounts with the two financial service institutions in the same PAN?
Yeah, possible. There is no restriction. It's just like a bank account. You can open multiple bank accounts, no? That is possible.
Okay. So, thank you to everyone who has taken their time from their busy schedules and attended our session. While I wanted to, organize a session, when we wanted to organize a session like this, I was initially a bit hesitant to contact Nikhil sir because he has a celebrity status on Instagram, and I was messaging his team, and the moment I started talking to him, he was very friendly, and he was more than willing to take this session. So I thank him, for taking his time out today and addressing us. The session was very valuable as far as we are concerned. I really hope that every one of us has taken something out of the session, just like Nikhil said. And I really hope that you'll be able to implement that also in your future life. So on behalf of NIOA and our team, we humbly thank Nikhil sir and Pentad Securities for taking your time. Thank you, sir. Thank you so much. It means a lot to us, sir. Thank you.
Yeah, thank you. Thank you, everyone. I hope this is make some difference in your financial life going forward. Yeah, thank you.